Hi. For Chapter 14, we're starting to talk about uncollectible accounts. We talked about accounts receivable and how that we assume that they're an asset because they're going to pay us. But at the time I told you we will deal with later the fact that everybody doesn't always pay us. Well, later is now. We're now going to talk about those people that don't pay. Businesses go out of business. Businesses have issues, as we can really tell right now in the pandemic. We will be doing 14.1 work together. And here we have an example of a business that is actually going to look at the amounts that have estimated not to be paid. Then they look at their history and say, hey, 2% of my current people won't pay. 4% of my people that have things that are 1 to 30 days outstanding won't pay. And you look how the percentages go up, and by the time we get to people that haven't paid within 90 days, 70% of them do not pay. And that's one way a company can estimate their allowance for uncollectible accounts. All right, so what this business is doing is they're just going out and saying, what is my outstanding accounts right now, my accounts receivable, outstanding that is due currently is $16,485.18. What is 2% of them? Well, if you do the math and round like you're supposed to, you'll come up with $329.70. All right, so let's look at those that are 1 to 30 days past due. Okay, those people, 4% of that $12,489.05, that's how much owe us currently. 4% of them will not pay. So if you do the math correctly and round correctly, you will come up with $499.56. All right, next group, 31 to 60 days late, 8% of them will not pay. And if you do the math correctly and round correctly, you will come up with $556.55. All right, here's our people that are 61 to 90 days out. 20% of them will default, and that amount will be $843.64. And lastly, this is a huge chunk. Not a lot of our accounts that are over 90 days late. There's not a big amount there, but 70% of them we've determined probably will default. And that's $2,209.97. Okay. So the next step is we're going to add all these up. Okay. And if you add correctly, you come up with $4,439.52. Okay. Current balance. So we have a current balance of uncollectible accounts. We had to get up to this far, and every month we probably are adding to it. So it says the balance in our, think about the worksheet that we're doing at the end of the month. Okay, so the balance of the allowance for uncollectible accounts before the adjusting entry is $236.89. So we have to put that in here and add the two together because it had a balance before this month started. So the addition now to the allowance for uncollectible accounts is you add these two together and get 4,000, or you'll take that, I'm sorry, you subtract that. My bad. $4,202.63. Okay, so that is step one. All right, and the next step is very, very easy. We're simply going to journalize So this is going to be an adjusting entry, and let's look and see. Balance is December 31st. So, and as we know, we do the adjusting entries at the end of the month. After we get our totals of all our accounts, we do the adjusting entries. All right, so this adjusting entry is two parts. The first one is uncollectible accounts expense. Okay, we're going to write this off as an expense right now. And as you remember, with adjusting entries, we don't have a document number because it's just part of the end of the month procedures. So we use that $4,202.63. Okay. And what we're going to be crediting is the allowance for uncollectible accounts. $4,202.63. Why are we using this amount and not that amount? Well, the reason why is we've already allowed for that $236.89 in our uncollectible accounts. So we need to make sure that we're not including it again. Think about it. If that's already in our allowance, it's already been accounted, just like this is being accounted this month for the uncollectible accounts expense. So that's why we have to subtract that out. All right, and we're going to grade our final step. And there we have it. That is 14-1, work together. Next up, 14-2.